Coca-Cola has just announced a historic $141 million investment in Canadian manufacturing. But this isn't just about making more soda. This single investment is set to create a wave of new jobs and could permanently change the economic landscape of Ontario. In this video, we'll break down exactly what this means for you and the Canadian economy. On February 17, 2026, in what many are calling a landmark moment, Coca-Cola Canada Bottling revealed a massive plan, $141 million. This isn't pocket change, and it's not just a routine upgrade. This is the single largest investment the company's current ownership has ever made, a clear signal that something big is happening. The destination for all this cash is the company's huge facility in Brampton, Ontario, a city that's about to feel a major industrial transformation. The heart of the plan is a brand new state-of-the-art can production line. But calling it just a production line is a massive understatement. This is a strategic move to completely rethink how Coca-Cola Canada supplies the country. The goal? To boost the plant's annual capacity by a staggering 20 million cases. Let that number sink in for a second. 20 million cases. It represents a seismic shift in production, aimed right at meeting the growing demand for their products across Ontario and all of Eastern Canada. This is more than a press release. It's a blueprint for the future. $141 million. It's a number that makes you sit up and pay attention. But to really get what it means, we have to look past the headline. This isn't just Coca-Cola, the global giant moving money around. This is Coca-Cola Canada Bottling, a truly Canadian company, making a huge statement about its commitment to manufacturing at home. To understand why this is so historic, you have to know who's writing the check. Since 2018, Coca-Cola Canada Bottling has been an independent, family-owned business. It was formed by two very different but equally powerful figures: Larry Tannenbaum, a well-known Canadian businessman and philanthropist, and Junior Bridgman, a former NBA star who became a hugely successful entrepreneur. This partnership brought the bottling operations back under Canadian control, a move that was celebrated as a return to local roots. This ownership structure is key. It means the decision to invest $141 million was made right here in Canada, with a focus on Canadian growth. It's not an order from some far-off corporate headquarters. It's a strategic bet being placed by Canadian owners on Canadian soil. As Todd Parsons, the CEO of Coke Canada Bottling, put it, "This is the largest single investment our owners have made in our business to date." That tells you this isn't just another project on the list. It's the top priority. It's the big one. The announcement itself showed just how important this is. It wasn't a quiet email to journalists. It was a full-on event at the Brampton facility, attended by a who's who of Ontario's political and business leaders. Ontario Premier Doug Ford was there, and he wasn't just watching from the sidelines. He championed the project, calling the investment another vote of confidence in Ontario's world-class workers. His presence and his excitement show that this investment lines up perfectly with the province's goal of boosting its manufacturing sector. So, what does this money actually buy? It's a massive, concrete expansion of the Brampton facility. This plant, sitting near major highways, is already a critical hub in the company's national network. It currently employs over 1,300 people and serves more than 7,000 local customers from Kitchener to Oshawa. This investment isn't just reinforcing that hub, it's supercharging it. The company has already invested over $230 million in its Brampton operations since the family-owned group took over in 2018. This new $141 million is the powerful next chapter, turning an already major facility into an undisputed juggernaut of Canadian beverage production. So, what exactly is being built with $141 million? The centerpiece is a new, technology-enabled can production line. And when the company says it's state-of-the-art and the most technologically advanced in the country, that isn't just corporate buzz. This is a huge leap forward in how beverages are made and packaged in Canada. This isn't about doing the same thing, just faster. It's about building a system that's smarter, more flexible, and more responsive than anything that's come before it. Let's break down what technology-enabled really means here. It's all about digitization and automation. Imagine a production line that can switch between different products and sizes with almost zero downtime. Traditionally, changing a line over could take a long manual effort. This new system, run by advanced software and robotics, will adapt on the fly. That agility is a game changer. It means when a new consumer trend hits, Coca-Cola Canada can get innovation to market faster, just like they said. This is also about precision and efficiency. Advanced robotics will handle repetitive tasks, making the operation faster and safer. Data analytics will likely be embedded everywhere, monitoring everything from fill levels to package integrity. This constant flow of data allows for real-time adjustments and can even predict maintenance needs before a breakdown happens, ensuring a level of quality control that's impossible with older tech. This is the factory of the future, and it's being built today in Brampton. The focus on a can production line is also a very smart, strategic move. Consumers have been shifting towards aluminum cans for a while now. They're portable, convenient, and they have a great sustainability story. Aluminum is infinitely recyclable, and the system for recycling cans is incredibly efficient. By investing so heavily in can production, Coca-Cola is perfectly aligning its manufacturing with what customers want and what the planet needs. The sheer scale of this new line is what really sets it apart. An increased capacity of 20 million cases per year is a number so big it's hard to picture. A standard case has 24 cans. So, 20 million cases means an extra 480 million cans will roll off this new line every single year. That's a river of aluminum flowing out of Brampton to stock shelves across Ontario and Eastern Canada. This isn't just a small increase, it's a quantum leap. It ensures the company can not only meet current demand, but is ready for growth for decades to come. As CEO Todd Parsons stated, the goal is to produce millions more beverages in cans. This is a calculated, forward-thinking move to build a manufacturing marvel. A $141 million investment is a headline. A state-of-the-art production line is the engine. But for the people of Brampton and beyond, the most tangible impact is the jobs. This is a story about human opportunity. The announcement promised a wave of new jobs, and it looks like that wave will be felt across Ontario. The first and biggest crest of that wave is in construction. The project is set to create up to 500 jobs during the construction phase alone. And here's a crucial detail. These jobs will be filled exclusively by Canadian tradespeople. That means the first cash injection from this project goes right into the pockets of Canadian workers, electricians, pipe fitters, welders, and builders from Ontario. Premier Doug Ford made a point of calling these good union jobs. Unifor National President Lana Payne praised the investment as a major boost for unionized manufacturing and long-term job security in Ontario. Her statement gets to a key point. In a time of economic uncertainty, creating hundreds of stable, well-paying, union-backed construction jobs is a huge deal. And the Canada First approach doesn't stop with the workers. The plan requires at least 75% of construction materials, like steel and drywall, to be sourced from within Canada. This creates a powerful ripple effect through the supply chain. Steel mills, drywall manufacturers, and countless other suppliers will see a direct increase in orders. This isn't just about building a factory, it's about firing up an entire ecosystem of Canadian industry. While the 500 construction jobs are temporary, the long-term impact is just as important. The Brampton facility already has a massive workforce of over 1,300 people. An investment of this size is the strongest possible statement a company can make about its long-term commitment to those workers. It replaces uncertainty with stability. For the 900 Unifor members of Local 973 who work at the plant, this is a concrete commitment to their future and their families. So what about new permanent jobs? The initial announcements have been a bit quieter on that front. But let's be realistic. An operation that's increasing capacity by 20 million cases will almost certainly need more people to run it. It will require skilled technicians for the advanced robotics, logistics experts to manage the massive output, and quality control specialists to oversee it all. This investment is a multi-layered job creation engine, starting with a construction boom and laying the groundwork for a new generation of skilled manufacturing jobs in Brampton. While this investment is big for Canada, its heart is in one place, the city of Brampton. For this fast-growing city, a $141 million investment from a brand like Coca-Cola is more than just good news. It's a powerful statement. It declares that Brampton is a major economic engine in its own right and a top destination for advanced manufacturing. Brampton's mayor, Patrick Brown, put it perfectly. He called the investment tremendous news for Brampton and a strong endorsement of our city as a premier destination for advanced manufacturing and innovation. His words are telling. It's not just about the money. It's about what the investment symbolizes. When a company like Coca-Cola Canada Bottling chooses Brampton for its largest investment ever, it sends a message to the global business community that the city has the right stuff: a skilled workforce, a strategic location, and a pro-business government. Mayor Brown pointed out that Brampton's diverse workforce, strategic location, and business-friendly environment continue to attract global leaders. The strategic location is obvious. The plant is right next to major transportation corridors. The diverse and skilled workforce is a cornerstone of Brampton's identity, providing a deep talent pool. The economic impact on the local community will be huge. The 500 construction workers will be buying lunch at local restaurants and spending their paychecks in the local economy. The over 1,300 permanent employees, with their jobs more secure than ever, will continue to live and invest in their community. But the ripple effect goes even deeper. The expansion will strengthen our local supply chain, as Mayor Brown noted. This means local businesses that provide services to the Coke facility, from trucking companies to maintenance contractors, will likely see a big increase in business. A plant increasing its output by 20 million cases a year needs more of everything. This also cements Brampton's reputation as a powerhouse for advanced manufacturing and food production. The city has seen incredible growth in this area, with nearly $1 billion in industrial construction value in 2025 alone. This Coca-Cola expansion is the crown jewel. It acts as a magnet, signaling to other global companies that Brampton is the place to be, solidifying its spot in what some call Ontario's food corridor. This is Brampton's moment. We've talked about the tech and the impact on Brampton, but let's zoom out. With everything going on in the global economy, how big of a deal is it for a major company to go all in on Canadian manufacturing like this? What do you think this means for Brampton's future? Will this attract even more big companies? Let me know your thoughts down in the comments. This announcement isn't happening in a vacuum. It comes at a time of shaky global supply chains and debates about the future of North American manufacturing. In that context, Coke's decision is more than just a business move. It's a massive vote of confidence in the future of Made in Ontario. Premier Doug Ford's government has made strengthening manufacturing a key part of its economic policy. When he calls this a vote of confidence, he's also framing it as proof that his government's strategy of cutting taxes and red tape is working to attract big players. The Canada First approach for construction is a masterstroke in today's climate. Pledging to use 100% Canadian tradespeople and at least 75% domestic materials is a model of a self-reliant economy. The money doesn't just build a factory, it circulates within Canada, supporting a whole network of workers and suppliers. It insulates the project from global disruptions and keeps the benefits at home. As Unifor's Lana Payne said, amidst global economic uncertainty, investing in Canadian workers isn't just a choice, it's a necessity. This investment is also a welcome contrast to less positive news, like the recent uncertainty around the Stellantis auto plant, also in Brampton. The Coca-Cola announcement provides a powerful counter-narrative. It shows that while some sectors face challenges, others, especially in advanced areas like food and beverage production, are thriving. It proves Ontario's manufacturing sector is diverse and adaptable. This project is a key part of a potential renaissance for advanced manufacturing in Ontario. The province is home to over 800,000 manufacturing workers, and investments like this are critical for modernizing that industrial base. The focus on digital technology and automation is especially important, signaling a shift to a high-tech, skills-focused model. Finally, the fact that Coca-Cola Canada Bottling, an independent Canadian company, is investing so heavily at home sends a clear message. Producing locally is a sound business strategy. It makes supply chains more resilient and allows companies to be more agile in their own market. It's a local-for-local model that's looking smarter every day. This is a shot of adrenaline for the Ontario economy and a beacon for the future of Canadian manufacturing. So, when the dust settles in Brampton, what will we see? More than just a bigger building. This $141 million investment is a turning point that will reshape Canadian manufacturing. First, it's about historic scale. This is the single largest investment from the company's Canadian owners, set to boost production by an incredible 20 million cases a year. It's a giant leap to secure the supply for Ontario and Eastern Canada for decades. Second, it's about profound economic impact. It's a job creation wave, starting with up to 500 union construction jobs for Canadian tradespeople. That wave ripples out to support a domestic supply chain and, critically, secures the future for the 1,300-plus people already working at the Brampton facility. Third, this is a story of technology. The new line will be the most technologically advanced in the country, pushing the facility and its workforce to the cutting edge of the industry. The future of manufacturing is being built right now, in Brampton. And finally, this is a story about confidence. It's a vote of confidence in Ontario's skilled workers, in the city of Brampton as a global business hub, and in the future of Canadian manufacturing itself. This one investment really does change things. It alters a city's economic path, strengthens a province's industrial might, and sets a powerful example. The message from Brampton is crystal clear. The future is being made in Canada. If you found this analysis insightful, make sure to hit that subscribe button. We're always breaking down the biggest economic shifts and corporate investments that are shaping our world. Thanks for watching.